Hello, hello.
There you are.
Oh, it's one of them days today, isn't it? Bloody hell. Well, I was wishing everyone a good morning and saying how we've made it to Friday, another week of trading under the bridge. Hope you're all doing fine and dandy and had a good week. You all right, mate?
Yeah, all good, man. All good. Apart from a bit less sleep overnight because of the BOJ, but happy it's Friday. Only a couple of data to go, and then we can rest for a couple of days.
Yeah, exactly. I had 2 alarms set last night, my normal get-up time and one for the BOJ, and I slept through both. So didn't look like I missed too much over it anyway. But yeah, we shall get over what went on. First thing to kick off with is that we got CPI data up ahead of the Bank of Japan, the national CPI numbers. Still in sticky territory. Was expected to drop back a pip in the core, but came in unchanged on last month's at 3.1%. National CPI, no expectations I can see on that one, on that calendar, but it still came in roundabout, just a pip loss on last month. So thereabouts. Inflation hovering around that 3% mark. And if you look at some of the others, we got like the fresh food, ex-fresh food and energy numbers at 4.3% unchanged as well. So still sticky inflation over there in Japan. And that's something Ueda mentioned in his presser, that they saw inflation being a bit stickier than their prior forecasts. Saying that the deceleration has been slower than in the July outlook. Didn't really keep on the front foot as far as monetary policy was concerned. They left their rates unchanged, everything unchanged, even forward guidance, the main lines. Ueda, one of his comments said he couldn't comment on the Yomiuri interview reaction. So that was kicking that one into touch early doors. Also said he can't say when policy may be adjusted. As mentioned today, we discussed that inflation's rate of deceleration has been slower in the July report. And if the BOJ goal is in sight, we will mull the end of YCC and a rate shift. So pretty much bang on the money as expected, Kay. A bit of a dial back on his comments, i.e. not clarifying them to the hawkish side as the market took them, and a can kick to later on in the year, perhaps.
Yeah, absolutely. Exactly as it might have been expected, and less hawkish than feared yesterday. Again, as I said yesterday, market a bit speculating, managing the books into the Bank of Japan, and but here we are back at the levels where we left it just before. Yeah, there's actually not a lot to say. The thing is, we had a lesser reaction than after the prior Bank of Japan, and I think that's for 2 reasons. One, we are at different levels, whether it's in the dollar globally and especially in the dollar yen. We're still at very low levels on yen overall versus everything. And then we had over the past 24 hours the 3 musketeers, Suzuki, Kanda, and Matsuno, all warning us against selling too much yen. So yeah, I mean, it's I'm not saying it's going to be a tough one, but it's and what I think should happen, unless we get bad numbers this afternoon in the US, we will come to those PMIs later. It's going to be a grind, in my opinion. The market is more reluctant now to take on the MOF, and that's understandable because of that level. So I reckon it's more going to be a grind than anything. Looking at where the US yields are, I need to talk about those PMIs coming out. This could be a bit of a, if the US PMIs would be weak, I think the market must already be short yet again. Then we could have a bit of a surprise move to the downside, I would say. But if not, if they hold, then I think the grind is on for a move back to 150, because the Ueda just sent us over to minimum November. October, sorry. It's going to be a live meeting. I think from now on, every meeting of the Bank of Japan will be live. There could be something done on any meeting, but it's, as we say, at the snail's pace. And let's not forget that the Japanese government is in the meantime going to come out with details about their big stimulus plan. Kishida already announced some kind of investment zone, English-speaking investment zone, to facilitate the paperwork, because the up to now, whenever you want to invest in Japan, everything needed to go through the Japanese paper mill, which is horrendous. I've been through it, and it's really not easy. But if they start to invest a lot of money, that may also be the reason why Ueda is so slow, and that we also mentioned already. So I guess there's a bit of, as you say, can kicking, ball pushing back, and hopefully for them, the government can fund it, and then he can unleash the horses.
Yeah, I mean, I don't know if I'm surprised or not. I thought there might have been a bigger reaction. You know, not even breaking yesterday's highs. You know, tells its own story. You know, as we're fond of saying to our mate Ali, talking about rockets, you've got to keep your expectations low. Yeah, there was a possibility that we could have shot up, but we haven't, and that's what you've got to look at. What's happened in the price action. We haven't taken out those highs. Doesn't mean we're finished with them, but we've come out of the Fed, the BOJ data, PMIs, inflation, everything else, and the price is where the price is at. So, like Kay says, I'm less inclined to think we get any explosions higher, but it doesn't rule out another grind like we've seen for the past couple of weeks. You know, just continued bid, not really dipping back. This is all the volatility, up and down, up and down, up and down. So now we need to see where we carry on in. Staying above 148 into the close, I think, or at least down that 86.95, 48 area, whatever you want to call it. If we're above that on the close Friday, it may give us a bit of a base. If we're holding those levels, close it the week off there. Maybe we start the grind from that point next week.
Yeah, it's all possible, mate. I'd look at it a little wider, perhaps, but because 148 is really close, 148, 147.90. But I think, I mean, the big level is going to be closer to 147. But yeah. I fully agree. But again, I reckon, yeah, it's not going to be an explosion unless those PMIs this afternoon surprise to the top side in the US, in which case, as we are on risky levels for a lot of dollar pairs, like euro, dollar, cable, whatever, that could see a last push in the dollar higher into the end of the week. But I was just looking at the options. The vol is coming off in the yen as well. So of course it's after the event, which is logic, but also globally, if you look at the 1 month and so, the vol is gradually coming off. So the market is, one, reluctant, I think, to buy it aggressively close to 150, and two, also keeping in mind that the rest of the world is not doing that great either. So I think, if anything, is going to be a grind.
Yeah, very much so. And this is the part of the show where, if you think about it like tides, okay, this is where the tide is just changing. So it's not going out, it's not going in, it's in that flux moment. This is where we are in markets. We've had the big hike cycle. Now, as we said, September, these bank meetings have been very important for setting out policy for the months and next year ahead. And, you know, we're in that tide changing moment. Everyone's acknowledging people are at their peaks. It doesn't really matter whether the Fed's got one more in it, the ECB's got one more in it, the BOE's got one more hike in it. we're at the top. So now the market is going to start trading that change into when rate cuts are going to start coming in. So this is that, as I say, the part where the tides are in a bit of flux, and we need to know which way they're going to flow next. So that's what you're going to be expecting in prices. Markets now, as you said, volatility is probably going to come down across the board because everyone knows that we're over these risk events. We know how we're set. We're going to be playing the cut game from now on in. There's no real reason for vols to pick up on indecision over central banks. Everyone knows pretty much where everyone is set. And that's what we're trading going forward. Right. Anyway, let's crack on. We'll look at the other PMIs as well while we've got them up. Excuse me. So over in Australia, PMIs there, a loss on manufacturing, but a pickup in services. So a bit of good news for Australia PMIs there as well. Over in Japan, bit of further weakness in manufacturing. Services a little bit softer again, still in expansion. So no real worries there. Retail sales in the UK, not really anything to write home about. Missed expectations by a pip on the month, down slightly worse on the year. Core sales coming in as expected, again slightly softer on the month. Given how this is for August and July was a complete washout, as was much of August as well, but it seems the washout last month has at least gained a bit back. I want you take both months as a whole, and you're probably looking at flashy sales, so nothing overly good about that. Although surprisingly, the FT was out with a piece overnight saying UK consumer confidence was at the highest level since January last year. I'm not sure why they're so chipper, because the FT are usually the doomsayers among the UK press. It was the second consecutive monthly increase, which apparently was supported by strong wage growth and easing inflation, which you can probably point to because we've had all those big bumper pay rises in the public sector and whatnot, and with prices coming down, there's a few more coins in the back pockets of folks, and that's a similar pattern you'll see in a lot of economies with that sees decent wage growth and inflation coming down. Gives a little bit of a boost, and we could see a little bit of an economic boost from the consumer on that side. It's just a question of whether it outweighs weakness elsewhere. Anyway, moving on. France. That Spain GDP was final numbers, I think. So Q2, we don't worry about that. We're near at the end of Q3. France manufacturing much softer than expected. Services much softer than expected. So not looking good still over in the Frogland. The Germans as well. Little bit of a pickup in manufacturing. Little bit of pickup in services as well, but again, still in that contracting line, well below, particularly for manufacturing, the big growth engine of the Eurozone, well below expansion. But maybe services are creeping back up a bit. Maybe it's that inflation factor, wage factor that we've just been speaking about. The pan-Eurozone number, saying the same thing. Bit of a pickup in services, as you can see there, 48.4. Manufacturing, though, going backwards. And over to the unsurprising UK PMIs, which Bailey kindly touted us the result of yesterday in their policy deliberations. Well, services pulled back two big figures to 47.2 from 49.2. However, manufacturing went up 1.2 to 44.2. So it wasn't quite the disaster perhaps many have been thinking of, although that services number is the most important as it makes up the bulk of the UK economy. And while we're in the UK and speaking of the Bank of England, well, they pulled a bit of a surprise, keeping rates unchanged at 5.25%. They voted 5-4 in favour of keeping rates unchanged. You'll remember the to and fro we had about the Bank of England and the possible votes. Well, it wasn't a big majority decision to keep rates unchanged. That was their hawkish message to say that a hike is still on the table. But as expected, no matter how hawkishly they spun possible hikes or doing more, whatever, the market was having absolutely none of it. Even saying that they're going to increase QT over the next 12 months by 100 billion had nothing to do with it. They also mentioned, as we just said, that in their actual minutes that they had got the data for the UK PMIs today, and the way it was spun in that segment, it wasn't going to be a good number. BOE's Bailey popped up doing the press rounds afterwards and said, we will be watching closely to see if further increases to rates are needed. The job is not done yet. We're not predicting the next rate move. We still have a big job to do. And he gave us another little nod later in the evening, saying that it's noticeable for inflation to drop in November, or a noticeable inflation drop is due in November. So tipping the nod to more data. That one is a bit of kicking in an open door, because the next energy price cuts kick in from October. So no doubt we're going to see that effect in the October CPI numbers, which will come out in November. So, not really telling us anything out of the ordinary there. What did you make of it, Kay, the BOE? I mean, we got it right with the votes. It was still a bit of a surprise that they didn't hike, but as we know, they are the reluctant hikers.
Yeah, they are. I'd say first of all, it's not that I disagree, but I just my sensitivity around those votes are actually the the five that made the scale tip. That's it's kind of a clear message that the hawks are not in control anymore. But then, I think the main point was that they knew the PMIs already, and it looked as if they took that as a reason not to hike. If you read through the statement, which is like sending a pretty dovish message, I'd say. About the QT, so they're cutting, increasing the QT by 100 billion over the next 12 months, and that's you need to compare that to the US, which are during QT at around somewhere between 60 and 90 billion dollars per month, right? So I don't think that is going to change much, although it is de facto a bit of a tightener. We cannot completely dismiss it. That's the one. With the weakening in the data, and then aware of the flash PMIs, which is a bit of a strange one to put in a statement, if you ask me. That's, and on the other side, it's perhaps good communication, but it gave the market a free ticket to sell more sterling. Although we had a bit of a recovery up to levels where we entered the Bank of England, really, up to 123. But then those PMIs and the retail sales did the trick this morning to put it back down. For the rest, I'd say it's a weak BOE meeting, and it does make me think that it's going to have to tick up for several months, this CPI, for them to raise again, or having like the good economic data elsewhere coming out. Then there may be another quarter in there. But as you said at the top of the show, it's is it really going to be or making a big difference? In the immediate, it can, because if they hike again, as I said, there's always this little thing in the market where sterling is actually a high yielder right now. So if you start to get better economic data, sterling could actually flip to becoming bid again quite soon. But it's too early now, right?
Yeah, yeah, very much so. I mean, there's a couple of things. I don't care about central banks getting data ahead of time. That's their job. Fine. What I do have a problem with is them giving out, pretty much laying it out before it's been released. They're very big on leaks, supposedly, and people who leak data, and they've done just that. So that I have one issue with. Secondly, the QT thing, I think, was a way to soften the unchanged number. We always said if it was either one and done or done and more, or none and more, and they've tried to keep the more in that by softening it up with the QT increase. Further rate hikes are possible. Jobs not done. Blah 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 blah. But in this case, the market's going, nah, bollocks. We don't believe a word of it, and they're happy to sell the quid on that. But yeah, we've had pretty much, 5-6 banks all kicking in another open door and bringing down their peak BOE rate to 5.25%. Now it's at 5.25%, or remaining at 5.25%. And if we do get a couple of hot inflation prints, they're going to be hiking again. So I'm not ruling out a hike. I think there's probably a greater risk still of the BOE hiking more than the Fed. My base case was always 5.25%, 5.5%, with maybe an outlier 5.75%. So yeah, I'm still in that camp that they may need to hike on the inflation data, but I also know inflation data is likely to come lower. It's just how sticky it may stay. What else for the UK? And
Ryan,
yeah.
I was just reading back through the minutes, or actually to the summary, right? They also said that UK GDP is estimated to have declined by 0.5% in July, and that may went a little bit unnoticed. But isn't that lower than the expectations were originally as well?
Yeah, I think so. Didn't they brought down Q3 as well, didn't they?
Well, wasn't it expected to be around flattish or so, or minus 0.1.2 or so, and now they're expecting to decline by 0.5. It's just adding to the weak sterling picture, right?
Yeah, very much so. And that was really going to be my next point.
And as we already said, I'm sorry, to cut you off, but as we already said many times, and I've said this a couple of times, the market is also very emotional about sterling. We have to take it into account. It's because it's just a market fact, because it's just a fact. So if things go bad or good in the pound, it can move quite rapidly. So we have to take that into account as well. If you start to have revisions or better data, the sterling could easily turn around as well for a good few big figures, actually. So we have to take into account a bit of the emotional volatility in the sterling as well.
Yeah, it's like a negativity premium that goes into the UK, because when things aren't bad in the UK, they're always terrible. And what that does do is it gets people overly bearish, overly negative, and then all of a sudden the data isn't as bad as expected, and there's a big rush the other way on the positive side. That's what usually happens. I'm a bit more fearful this time around that the negativity is going to play out more, i.e. we're going to see that negativity. Usually I'll be, the market's expecting minus 5% growth. I'll be, no, it's probably only going to be minus 2% growth. But I'm a bit more worried this time around. There's a lot going on in the fundamentals, on the ground, cost of living, that sort of thing, irrespective of this wage hike. We've got this potential mortgage problem coming up because we don't have long-term deals like they do in the US. So there's going to be a lot of people refinancing onto much, much higher rates. So I'm potentially, and the political side as well. We've got an election coming up next year. The government just seems to be stepping from one pile of dog poo into another pile of dog poo. And that's going to potentially mean a lot of uncertainty coming in. So I don't see a rosy picture for the UK going forward. That's partly reflected in my long euro sterling trade. I'll be on a personal level, I'll be happy if that's wrong and the UK does recover. But I tend to have a bit of a nose for these things, and I'm not really expecting much good to come out of the UK over the months ahead. And if I'm wrong, fine, I'm wrong, and my trades will reflect that. But that's just my view of how things, I see things maybe over the months ahead. And we shall see. In about 4 minutes, we have the CBI industrial trends orders out. So we'll see whether that is good or bad. I'll keep an eye on that. Anyway, so that was the BOE done, BOJ done. We're over it all. We'll have a quick look at the US data from yesterday. Jobless claims were tickety-boo, another low number, 201,000. So 24K lower than expected. It's actually trending down now, the jobless claims. So that's feeding into the positive jobs market we've already seen. Philly Fed, a little bit all over the shop. The headline number was down more than expected, minus 13.5. But when you look at the components, CapEx, which is investment, was up 7.5. Employment was not as bad as it was last month, but it's still not a huge negative number. New orders was down, which is going to play into that headline number, but prices paid was up. So that's mirroring what we've seen in the inflation data of late, that there's been an uptick in price pressures going in. So a little bit for everyone there in that data. So that's the Empire, which looked a bit better. The Philly Fed on the headline looks a bit worse. Mixed data. Today we have obviously got the S&P manufacturing number for the US. So we get to see what comes out of that one. Also, just keep an eye at CAD retail sales as well for way back in July, but could be another potential mover for the Canadian dollar. And there's the S&P Global manufacturing and services numbers there for the US, not the big ISM, which I think is next week or the week after, if I'm not mistaken. Next week, yeah.
I reckon so. Yeah, I reckon so. There's the week after, right?
Yeah, coming into the end of the month, isn't it? Yeah.
I think it could be a kicker, right? Today, this S&P Global PMI. ISM is always more important, but looking at how the rest has been trading and how this week has gone, and if you look at equity markets, if you look at the bond market and stuff, I mean, it's Friday, yeah, and this number could all of a sudden have more impact than which it would have if ISM would come out the next day, for instance. And I think being Friday, we have to be on our guard for this number, I'd say. It could do something, because it looks as if the market wants to take profit on long dollars. But if this number beats versus the European data that we have seen, and pan-Europe, I mean the Eurozone plus the UK, if this US number beats, then all of a sudden there could be a last hours rush into the dollar to end the week. If firstly we get a weak number, that would put the US a bit more in the other camp, in our camp, let's say, and could all of a sudden weigh a bit on yields and stuff, and the dollar could get a little bit of a kick in the bum, because the market looks to be wanting to take profit on longs. Yeah,
it's all going to be fun into the week, I think. The only last headline I've really got is that US House Speaker McCarthy, speaking about the shutdown potential, said that House Republicans had a funding breakthrough last night. So this is just the Republicans looking to agree with each other before that all goes forward to the machinations with the Democrats. But getting one house in order leads to maybe getting two houses in order. We shall see. Did you spot anything else you wanted to bring up, mate?
Look, I mean, there's a bit going on again in China. Yeah, they want to ease foreign stake limits in China. Now they really want to attract foreign investors again, because they know that is partially going to save not their internal but their external economy and tried to give a bit more confidence back, but I mean, it had a very, very limited effect. What is still the case, though, and just going, if you can put up the dollar China, perhaps, so I don't have to show it. What is still the case, though, is that we have to look at where the PBOC fixes the dollar China, because again, yesterday we had a peak above the 2% dollar CNY limit of the band, and we came back under it. So there is still, I'd say, interest, or perhaps the will to cap it around that level. Yesterday it was in the mid 731s. We went in dollar CNH just above 731.5, up to 80 or 90 or so, and we woke up this morning and we were below, right? So I still think it's an important correlation to observe.
Yeah, and they've been fixing it around 717 all week.
Yeah,
pretty much 717, 718. So they're still indicating their preference at the moment for that. But yeah, I mean, I still think just at the moment there's a little bit more dollar in this than China. But you know, it ebbs and flows. You know, we've had the Fed obviously, and the central banks and the BOJ and whatnot. So you know, there's maybe next week we get a bit of a clear indication from the CNY, CNH side of where this wants to go. But I think
if you look at the fact we had all the central banks, they kept their rates still, the Chinese. But if you look at it overall, it's been extremely quiet in China. In the CNY, CNH, through all that. We moved a bit, but it's all contained to virtually 0.5% or so, which is not a lot in a currency. So it's very quiet, and I think they plan to keep it that way just to discourage the speculators, right? If they keep it long enough, speculators will turn their attention to other currencies. And I think that's their play right now. And afterwards we will see.
Yeah, very much so. Very much so. Right, well, let's move on. Mike asks, it slipped off. Is the bad news all priced in cable around 22.30? You can never put a level on when news is priced in. We've had the Fed, we've had the BOE, and you know, we're down some 200 pips this week, give or take. So you know, that says it all. Now we're going to be playing the growth game from here on out. So is this a bottom for the pound? Who knows? We're all going to be data dependent, as we have been for the foreseeable future. As Kay mentioned, though, we've had all this coming out, so maybe we get to see a bit of profit taking into the end of the week, because everyone who's been spanking it all week will think, right, let's take some off the table. Again, look at where we closed today, because that will give you an indication if traders are taking profit today, but they're happy with their position and their bias, then they can come in Monday and continue it. That's what you need to look for. What I would say, and those in the chat room would have seen this heads up, we do have quite a few expiries today in cable, which is unusual in itself. We do have over 1.3 billion going off between 20 to 40, 50. And what's significant about these expiries is that they were all put on, these options were all put on in the last couple of weeks or so. So that suggests that it is event risk trading, hedging, whatever you want to call it. And thus we might see a bit of last minute squaring, hedging around those options into the roll off at 3 o'clock this afternoon. So oftentimes options, you know, if they've been sitting there for months, then, you know, probably all the people who've traded it have done all their hedging and whatnot. Maybe there's some light last minute stuff to be done, or when they expire, people chopping their positions or whatever. But when you see stuff that looks like it's been put on specifically for these events, more short term, then you might have a bit more price action around it. So it's not a surprise to see cable glued around this level right now. maybe that could be an opportunity later on if we're seeing wholesale dollar moves elsewhere and cables not following suit, then into the expiry might suggest a bit of a catch-up trade opportunity for that one. For example, let's say euro dollar is shooting up to 107, dollar yen's down to 147, and cables sitting at 122.40 and not following, and we're 5 minutes from the expiry, then you might want to look at potential for a catch-up trade after those options expire. That's the way I tend to try and play options or trade against options sometimes. But anyway, cable looking very soggy on that one, and as mentioned, euro sterling has been my play on the potential of the Bank of England or the UK not doing as well, and the Bank of England finally coming to a rate peak. We're nudging up towards that big old 147, that 0.87 level, getting up to the 90s. Not quite getting up there. It's a bit of a zone between the big figure and 87, 15, 20, call it. Big area of resistance and big old support and resistance line historically. So this is the big number. If we crack above there, then we might be having a run up 88s, maybe even getting up for another move towards the 90s. I doubt it's going to be a straight line though, one thing at a time, but I'm still happy to be long in this one. I would potentially be considering a break trade if we get through there. But right now, that's the ceiling, and we need to see what happens with that one. Ali, your job in gold. Let's have a quick look.
I can show that if you want.
Yeah, you want to take gold?
Do you want me to take over because you're still?
Yeah, go ahead, mate. I'm
barking away.
Yeah. So, yeah, I'm struggling to speak.
Yeah, no. Let me quickly show my usuals from time to time. Okay. So euro dollar. This is the short-term euro differentials. So we blipped below at the end of August, and then we came back above, and now we are again around support here, and a little bit further down, close to minus 200 BPs. We are at the 50%, and then you look at the euro dollar. We've got big support here. I've been showing this already a number of times. Got big support here in the low 106s. We've tagged it twice so far. And this could be, if we get like a surprise to the top side on the PMIs in the US this afternoon, this could be the clincher, these differentials, because the US yields will probably push higher again to push the euro dollar sub 106, 1020. I wouldn't trade it right now. I would really wait, because we already had two very decent bounces of the level tryout, right? We had one yesterday during the Asian session, and we had one earlier this morning on the French PMIs, tested the low and bounced. So keep a very close eye on the 106, 10, 20 in the euro dollar. If that goes in turn, then I think some are calling for 105, 104. Then it's becoming a real possibility. So that's why I think this afternoon US PMIs, whether even though they are only the S&P PMIs, could be a bit important, because we are at the end of the week as well, and people may not want to counter trade much. Then I'm going to show the other one, which is the sterling differentials. And you only have to look at this one to know what's happening in the cable, and why cable is just remaining very weak. Look at what happened over the past this month. Actually, you look at the cable, you overlay it, and it's probably going to be a very close correlation. And as I was saying yesterday as well, we were hanging around this level around after the Bank of England as well, and then into the close we tried to get back up there, and that was the 123 in the cable. And then now we pushed wider again. These are negative differentials, so that means that sterling interest rates are below the dollar interest rate. So the deeper it goes, the more it should weigh on the cable, okay? And then you look at the cable, and this is what happened. So this is your, I mean, talking about this level, this is your 123.1020, right? Prior low, 61.8 of the other move, and then we were like hanging around over the Bank of England, dropped over the Bank of England, went close to it again in the afternoon when the UK market closed down, and in the evening. And then this morning we started to come down again. This is going to be an important one. So inversely, compared to the euro dollar, this on the cable top side is going to be an important one for if or when sterling will start to turn around. Okay, keep this level in mind on the top side cable. If this starts to go, then I think there may be a few starting to run for the exit, and a move back to 124.5 will not be excluded. If in turn this just continues to weigh heavily, I think we're on our way to 121.85 figure for a starter, and why not people looking for 120s could be the case, you know, if we get better than expected US data, or US data just holding up for that matter. All right, so this is a little bit on the why and how those correlations work between interest rates differentials and the currencies, and those two are really, of course, the yen is having a very close correlation with the US 10s, and the differential between the US 10 and the JGBs, but sterling and euro dollar are equally trading on the back of it. Let me take Ali's question. Here we are around this little fib here, Ali. Oh, I need to put that one a little bit lower. So we're turning around this fib here, but I think if you look at those two latest two trend lines here, I really think the level is 1935 on the top side. For as long as we're below there, I think we are going to range trade a little bit, but forces to admit that through everything that happened lately, with US yields flying, we still had the metals holding up very well, silver as well as gold. So you can trade against these fib if you like, or if you have another indicator that you're looking at. But if it would start to go through 1935 and hold, I reckon gold has the potential to move higher. And I don't know how the end of the month will pan out, but if I get a move back down to anywhere, I know the trend line will be broken here, but if I get a move back down into this area here in gold, I may start to catch a knife there. Okay, I mean, I'm rather starting to look at the other side just because it's holding up relatively well. As I said, same on the silver. If you look at the daily, this one, we had several tries below, started to form bottoms here, and it's holding very well. And we are turning around 55 DMA, 100 DMA, and we are above the 200 DMA. So this zone here is going to be important for the close. I think if we start to fade and we close below the 200 DMA, perhaps there is a possibility to go back into the mid 22s. If we start to close above all those DMAs, then I think we are on our way back to test this trend line here, and whether it's at 2240s or 22 or 24, sorry, 70s or 2460s, that doesn't really matter too much. The direction will be there, in my opinion. So that for the metals. Dollar yen is just, as I said, it's a grind, but the market is reluctant to take it really higher. And I think that's the work of, as I said, the three musketeers, Kanda, Matsuno, and Suzuki, keeping the players on their toes, and perhaps a bit of profit taking into the weekend as well. Yeah, as I said, we've already spoken enough about it. It should, if you look at the snail's pace of the Bank of Japan and the rest of the central banks, not hiking anymore, but keeping their rates a lot higher than the Japanese, it should be a grind higher. But beware if one day we start, because this has been holding very well, if we start to break this trend line, and I'm going, oops, no, that's not the one that I wanted to kill. And I'm going to add the 4-hour cloud here because, and it's been noticed in our room as well, it's been really supportive over the last moves of the dollar yen as well. So if you watch charts, keep an eye on the cloud. I wouldn't go any lower than the 4 hours. I'm not anyway, but keep an eye on it. Today it comes in around 147.5, and it's moving slightly higher up to 147.60 as the day will move on. Keep an eye on that 4-hour cloud, okay? If we start to get back inside, maybe some short-term accounts may start to feel a bit nervous about the rest of this move in the dollar yen. Do I need to talk about anything more? I see like Kiwi CAD and Kiwi Swiss. If you want to look at it, be my guest. I'm not looking at that, but what I'm looking at in Swiss is, of course, the dollar Swiss has seen a very big rally of this 89.30, which I bloody missed for 2 pips. But I'm a bit long Euro Swiss on after the S&P yesterday. Yeah, dollar Swiss 90, 85, 91 the figure. That's going to be a watch this afternoon. Whether we manage to crawl above or cap again, there's several tops of here and the trend line coming in here. So keep an eye on what's happening in the dollar Swiss around here. I do think with the, I'm not going to say full green, but with the pale green light that S&P gave us by not raising the interest rates anymore, I do think that things like Euro Swiss are starting to look a little bit better. We have to respect this trend line though, which was yesterday's top around 96.75 in the Euro Swiss. But for as long as we start to hold down 95, 90, 96 the figure, I'm relatively constructive on this one. And with that, I give it back over to you, Ryan.
Thank you very much, mate. I will grab that back quickly. I've just, yeah, let us know, Barbara, what you're looking at for those two as well. I've just knocked up my Kiwi Swiss and Kiwi CAD, just to have a little butchers. For the Swiss side of things, all these pairs are looking similar purely because of what's happened with the SMB. So you're seeing a move up in all Swiss pairs at the moment, mostly. Pound Swiss is a bit of an exception right now. So you've got to go with the flow of what's happening with the SMB. Levels wise, what you have got in both is potentially a bottom in the trend. It's stopped going down, which is the first thing you want to see, obviously. But it's got some work to do. For Kiwi Swiss, you've got a bit of an area up here getting into the 54s, up to 54.40, call it 54.5. We've got the 100 DMA in there as well. So there's plenty of, there's a test here. If it's going to continue higher, there's a test here. If we do pull back, you're going to be watching round about 53, 30s. But really, it's all about whether we get back down to those lows. If you get back down to those lows, test and hold, you're going to have maybe a bit more confidence that we've got a bottom in play. We already know that the Kiwi data is potentially turning a bit upward, looking a bit better, maybe going to be pushing the RBNZ to talk a bit hawkish. So at the moment, with what's happening in the Swissy, what's happening in the Kiwi, the balance of power, shall we say, is with the bullish side for this at the moment. And but dollar CAD, Kiwi CAD, looking similar as well. You know, we've had the breakdown, we've hit a bottom, we're now trying to push up. Got this level here around 80, 80.5. That's your next level to watch. But take the trends in play as well. You know, this is just the short-term trend over the last couple of months. And, you know, we're still miles away from the 38.2. Don't even bother looking at the bigger trend from last year. That 38.2 isn't up until 0.8276. So long way to go. So there's no real signs that the trend's breaking, but there may be signals forming that we're finding the bottom. But let us know what way you're looking at it. Are you bullish? Are you bearish? Are you long? Are you short? Are you neutral? And what are you looking to do? And that way we can give our thoughts on that as well. But maybe Barbara, save that for Monday, because I think we're about done and dusted for today and this week. I hope you've all fared well. I hope we've steered you well this week, the both of us. Helped you get out of trades with a profit, hopefully. If you're not already, do come and visit us in our chat room. You can take up the buck for 10 days and then take the Forex Flow discount if you want to come and see what we do each and every day. Thank you, as always, to my colleague, the K-Meister, for his valuable insight.
Hope you recover this weekend and you're back in full force on Monday, mate. And thanks, everybody, for joining us every day. Just one before we close here. Keep an eye on 43.30 in the S&P. It's a bit of a level where we are at right now. Keep that one in mind just for the debates on our Friday afternoon in the US markets.
See, there you go, folks. Levels till the last, to the last breath. We're talking levels. Thank you very much, everyone. Have a great weekend.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.